Good morning, Predicted Trades family. Hope everybody's doing good. Oh, we're gonna have fun today in prep. Oh, I just can't wait. So much fun. um, I am gonna ask you guys a couple of questions, a couple of little like pop quizzes, a couple of why did this do that. But excuse me, let's dig on in to ES. And we'll talk about the gap down and the whole snap fiasco. But first, let's just talk about how the day went yesterday. We started with this gap fill, or this gap below. When we opened the cash session, we had a squeeze in place right at that gap fill. And we reached down just to tap where we opened and tap the top of that gap fill. It looks like we actually reached in just slightly to tag this little trend line that I got going. Ultimately, we fought our way back up to and above this zone and just kept bouncing around this zone and the daily 8. And every time we got above the daily 8, we just reached up into the squeeze top just enough to come right on back. Ultimately closing near the highs, but then when all the earnings came out, we gapped down. So now we are pinned between a gap below, a gap above, key levels above, and the squeeze surrounding us. We should definitely note this 2-hour squeeze now encompasses filling the gap and getting back to yesterday's highs. We also have a 4-hour squeeze that's coming up right at the lows from last week, right at our key zone to the downside. So folks, we are trapped between a key zone, key levels, 4-hour squeeze, same thing to the upside. And the moving averages are slowly coming down into this squeeze. We have FOMC on Wednesday, and we have our range set. We are likely just going to bounce around in between these gap fills and these key levels until we most likely will fill the gap to the downside, being that this is a smaller gap and we've already struggled at the moving averages. But let's see. If we hold this gap or fill it and hold this squeeze bottom, 3,900, very, very key right now. Some folks say if we lose 3,900, we're going straight to 3,800. So, sometimes though, we have things in place to hold us up, like these squeeze bottoms. So let's see if we can hold this gap. If we can hold that 2-hour and 3,900, we can stay up in this range, bouncing up to test the daily 8 and the zone above. If we give out, we can go straight back to our zones below and this 4-hour squeeze. I think that will hold us up. I think we're moving into a lot of higher time frame squeezes on many names, so we need to be ready for a chop. And with an FOMC week, we're going to have chop until all that data comes out. Speaking of which, let's just review one more time. Oh, we had a lot of economic data coming out this week. Powell speaks today at 12:20, but it's just opening remarks at a Native American Development Conference. So I doubt that there will be much about, the overall national, inflation and blah, blah, blah. I think it'll be more focused towards their whole conference and whatnot. So not expecting much out of that today. Tomorrow is FOMC, the big one. Right here, right? Aye. We also have some Fed speaking around noon. Basically, tomorrow's going to be a chop day until this comes out at 2, and then we'll have the algo dance, and then we'll have Powell speaking, and then we'll have more action. And then Thursday, initial jobless claims, real gross domestic product, pending home sales. On Friday, inflation, 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 inflation. We're going to be getting a lot of economic data on Friday. There's also real consumer spending. This is all very important and key to let us know how the economy is doing, if inflation might be peaking or already have peaked and coming back down, or if we're actually still seeing increasing inflation. So, a lot of economic data coming out. Be prepared for that. And be prepared for chop. FOMC will be fun and might get us out of these ranges, but FOMC, we might chop in this upper range. FOMC happen, we might fall to this lower range and then get going right back. 4-hour squeezes this thick, we're going to be contained at these levels. So, FOMC can start to propel us into one of these clouds and pushing it open. But we still have all that economic data coming on Friday. So, we'll see what we get and we'll come up with a game plan every day. Today, the game plan is basically chopping in a 50-point range until we start to give out and push against one of these clouds. Do I expect us today to dump out of this 2-hour to get down to the 4-hour? I don't actually. I think the 2-hour being nice and thick and at key levels at this 3890, 3900. I think we can fill that gap. There were buyers present yesterday when we tested that gap. I don't think anything in the market has fundamentally changed to where they're just going to tank us through it. But we got to take what comes at us. So let's see if this will hold. Send us back up to 39.53 for a test and some chopping around. Let's move on to NQ. So NQ already did fill its gap yesterday. It slipped it, so that's why I did not extend it any further into today. And then with its gap down, it filled it again. So we should always, or at least I try to make a habit of marking the gap. Boom. That kind of represents our gap. So let's see if we can hold this pre-market low and this squeeze bottom. This 2-hour squeeze is much closer to its 4-hour squeeze, so we can potentially slip this to tag the next. This 11,650. And right now, that 12,100 is kind of key. That's our big target to the upside that NQ has to get through to start moving higher and potentially get back to the mean. That 12,100, big line in the sand right now. So let's see if our 2-hour squeeze and our pre-market low can hold us. I can see us definitely getting back to and maybe even through this gap fill zone. But again, we need to be ready for a chop. We do have a 30-minute squeeze that's forming on NQ, a little cleaner than the tiny one that was forming on ES. So we could just be contained between this 2-hour bottom and this gap, and just kind of chop around today. Expecting more chop than, further lower or recovery to fill the gap. Ready, same thing. Very tight, basically a 30-point spread that it will probably chop around today. Its gap is very small, so let's see if it can hold its feet at this Keltner, get back and fill that gap, and test this 15, and then probably just chill. YM. Right now, this 31,800. Big line in the sand that's going to be holding us down until we get back above it. YM's 4-hour squeeze. Not too far away to the upside. We are dealing with a gap down. Let's see if it wants to maybe fill that gap. YM, lately has been strong to start. Let's see if it tries to go up, fill that gap, ultimately fall back below this 800. And it might set up a nice short to get through these tiny little squeezes that are forming and dump down to this 4-hour. Not saying that that dump occurs today. We could easily just chop around this range, kind of between 500 and 900, or 500 and 800. So we could be stuck in a 300-point range today, chopping around this Keltner, which is first Keltner, into FOMC. But, always be prepared. There's times where they can't wait until FOMC and they just start dumping things. YM looking a little weaker as far as the squeeze structure to hold it up. So if it does give out, that 500, 450, we could get a little saucy back down, back to the downside. And we do have a little gap there that's worth noting. I'll mark it later. But note that gap around 250 to 280. That little gap could stop our bleed if YM starts to bleed. Could stop right around there and bounce before it got down to that 4-hour. Moving on. Apple. Very strong day yesterday for Apple. Oh, yeah, that's what I wanted to look at. Another thing I'd like to note as we jump around these charts, look at these interactions with these daily Keltners. That's why I throw it on these charts, to help us. We're always moving either away from or back to the daily moving averages. That's why I track those. And the daily Keltners can be the turning points that send us back, right? In a way, these Keltners are like standard deviation. And when we get 3 standard devs away, we can see that turn around and come right back. Anyway, Apple, very strong day yesterday. My key levels were that 138, 138.8. Those are the lines in the sand. We needed to hold those to go back up. We opened just slightly below, but we did not go lower than pre-market low, and we took right off through that zone back to test it and up further, right? It should be noted what goes on in the first 2 30-minute candles. They can truly set the tone for the day. So I know that we are sometimes down on 1 minute candles, 3 minute candles, yada yada. Don't lose sight of what 30-minute trends are doing. You know, after the first 30 minutes, you should go check. This 30-minute candle that gets through the zone, taps resistance, but closes above the zone, always sets up the next one to retest the zone to go higher. It's very common. Anyway, Apple very strong yesterday, made its way almost to the tapping of the daily 8. We get the gap down with the market, but Apple's holding up nicely. Stayed above 140. 140 very key now. So we've got our pre-market low right about that 140. We've got yesterday's high back at 143, and the daily 8 will likely be right about there too. 4-hour is just forming on Apple, and most of the other squeezes are not intact. So let's see if pre-market low can hold. If it gives out, we're retesting this zone at 138. But, I mean, a lot of buyers came in and then had continuation. So I think they're going to defend this zone, and we'll probably chop around in between the daily 8 and hopefully just 140 in this pre-market low today as we lead into FOMC. And you know, I'm expecting chop today, but we can move in a direction. We all know FOMC is tomorrow, so I'll quit repeating it for every ticker as we go through. AMD. I hope that folks kind of, yesterday at least, my warning was chips did not have a great recovery from Friday's sell-off. Some things finished green on the day for AMD. That would have meant getting back above 97 on Friday. But we couldn't get there yesterday, and at least my warning in prep yesterday was chips don't look like they're ready to lead. They look like they'll go sideways, so let them, right? AMD, popped up to the mean, chilled for another hour, then got going with the market. But, basically stuck in like a 2-point range. And now those squeeze clouds are coming in to really say, yeah, we're pretty much stuck in a 3-point range. Call it what you will. So, ultimately on AMD today, I think we'll be contained within these squeezes as we chop around at the daily means. Amazon. So, a lot of things went down with Snap. If you're not familiar, before I jump into Amazon, let's just go take a look. Snap, down 20%. Oh, I hope this gets so low it just goes into bankruptcy and we don't have to deal with Snap anymore. As a father of 3 daughters, I really don't like Snap. I wish it were gone. Maybe we can put a nail in this coffin at some point. It fell outside of third Keltner. Screw Snap. But what it tells us is they're the first of the ad companies to report, right? So, who runs ads and who does that impact? Facebook, who's down hard, and we'll get to them in a sec. Google, down hard. Amazon, yeah, they have ads, but it's not their main gig, right? So Amazon dropping, it's kind of with the market, right? But this seems a little dramatic. In a way, in my opinion, I think they're just getting it right back to this key 2100 so they can load up a little more to ride into that split. So we'll see. Watch yesterday's low on Amazon. I can allow some slippage below this 2100. Tag that squeeze bottom and yesterday's low. But ultimately, I think they want to keep it above 2100. So they might let it slip 10, 20 points chop it back up above 10, 20 points. But I think we're going to see kind of a glue around that number. But we'll see. Cat. Talked about it in prep yesterday. Cat does not like to stay below 200 for very long. So here's 200. Last time we tapped 200, we ran up to 217. This time we slip a little below 200 into this 4-hour and daily squeeze. Yesterday we opened right at it for a tap, then took right off to the daily 8. So Cat had a very nice strong day, and it's holding up, and we'll probably open right near this first Keltner. So let's see if that will hold us. If we need to, excuse me, retest 200, or if we can hold 202 to keep going higher to the mean. Really, the whole slip in tech should not really affect Cat, and might even cause some rotation into. So keep an eye on Cat for a potential good upside play today. No real squeezes in place after coming off of this 4-hour and daily. I mean, it obviously still is going to have the 4-hour and daily. Oh, I'm sorry, it's a day. It's a 2-day and a daily. Okay, so let's see if it wants to retest those before going higher, or hold 202 and just keep on trucking. But this is a good candidate for upside plays, even if the market is chopping. Facebook. So Facebook has this shaded zone, which is the gap up from the last earnings. We slipped into that gap and set some levels. We have now, with the Snap earnings snafu, gapped down below those levels, and it's no shocker that the overnight action stopped at those levels. So we're about to open in the middle of this gap. I would not be surprised for us to come up, tap these levels, and then die and finish filling the gap. Because, you know, in the idea that gaps need to be filled, we've already partially filled it. Let me get this, there we go. We've already partially filled, so we left a partial gap. Now we're going to open in it. Wouldn't be surprised for the cover pop, just to tag this, then the rollover. Because again, if Snap had a huge miss on ads, they're simply thinking, well, Facebook's going to miss, blah, blah, blah. So, if you've been wanting to short Facebook through this gap, now, you know, you're going to be opening in the middle of it. This is at least what I could foresee happening. Quick pop up to tag this, and then a rollover. So you kind of get your chance to fill the rest of the gap. Google. Big old dump, trying to hold this H, trying to hold this 2120 key area with this 2115 low. So we got a zone of support. We still have this big old daily squeeze that hasn't gone anywhere yet. And we're going to be opening near the bottom of it. So let's see. If you want, you can even come in and mark this low and this low. And you got a zone of support. I've got a key level down below at 2088 and psychological 2100. Third Keltner also right down there, making another zone. So one zone of support that's kind of small and has allowed us to bounce. If that doesn't hold, we're dumping to the next zone at 2075 up to 2088. So two zones of support that should stop us from bleeding further Typically when daily squeezes are this thick with red compression and everything, we don't dive out of them and fire them when they're this thick. We push against them until they get nice and thin. Look at these squeezes. We run into them, we come back to them, and they're getting thinner, thinner, thinner. That's when it's easier to break through. So, 2 zones of support right here for Google. Let's see if it slips one to get the other, but ultimately expecting it to get back into this daily squeeze and push back higher. Oh yeah. Any lower than that, I probably have some drawings out somewhere. Alright, well, I'll grab some at some point. But let's see if that can hold us up. Obviously, psychological 2000 is what we're getting near. So, GS. Ugh. Banks had quite a day yesterday, pushing up through this 4 hour, but coming back. This is a great example of when the squeeze is in place, we can push through it, but when it's still in place and not disappearing, we have a very good chance of coming back. It's still intact, but much thinner. So now if we push through it, we can get through. GS made it almost to the daily 50, first Keltner up, and this daily squeeze top. Well, let's see if they want to, on an attempt on the market, to kind of pop for a cover or to fill the gap. Let's see if banks still want to lead and come up to test again, or if they're just going to be contained between these daily moving averages and the squeeze top as we chop. Now, JP Morgan. And before we get there, pop quiz time. Let me remove all the tools that help us every day. I'm going to jump to a slightly higher time frame. And we're going to go to JP Morgan. Oh, I forgot to take my drawings off. Dumb ass. Well, ultimately, the idea would have been, why did JP Morgan break out yesterday? Can you see it at a glance? Because hopefully, as I've been trying to teach day in, day out, you're training your eyes to see these things before you even draw them, right? We've been stuck on JPM since March, below this trend line. And every time we get near it, right back lower. And every time we get near it, yada, yada, yada. Recently, slipped it just a little. But this is not getting through a trend line. A little slip and closing near it, right? Because then you go right back down for the retest. This is getting through a trend line, where you gap right at it and you explode up to recent highs. Whenever we get through a trend line, we have to get through recent highs. Otherwise, it's fake breakout for the next leg lower. Fake breakout for the next leg lower. This works even down on lower time frames, on the 1 minute, right? A wedge, a trend line. We have to get through and take out the highs. We took out 1, took out 2, 3, 4, right? Stop short of this one. Our last test before a big leg down. And maybe not our complete last test, but key level that acted as a magnet to get us back. This is an old POC. And where did we stop short? Oh, come on. There we go. Doop, doop, doo. I took this guy, I believe, and connected him to the same. Boom. Because, yes, this more recent trend line was the first target to get through, but the larger trend line is also something to get through back from the high of year, let's say. So we gap above, test it pre-market, and then explode, taking out all these highs, getting through the larger trend line just to tag this, old POC, but then right back down to the larger trend line. This can be the jumping point, holding these levels to head higher still on JPM. So in a way, this whole thing was a technical break. I didn't find any news to really support why JPM would took off like this. If anyone else found news, please feel free to share. But let's see if JPM can hold up. Let's go back to our tools for prep. After I botched that quiz. Good job. So, we're back above the daily mean, the 21 here at 122. Let's see on this downtrend if pre-market low can hold. If not, we're going back to the 21. I kind of expect that to hold for us to come back to test this POC above at 125. Let's call it 125.50-ish. We are back below that trend line on this time frame. Let me just double check again. Ugh. See, this is what's annoying sometimes about TOS. A trend line drawn on a higher time frame, technically right now we're above it. When you start going to lower time frames, they jump around. It's so stupid. Because you're not, you don't have in view where those points connect. So it's approximating way off. So ultimately, let's see if the 21 can hold around this 122 and send us higher. Pre-market low can also hold, right? And send JP Morgan higher. I have to think on a technical break like this that buyers are going to still be present, but we have seen technical breaks happen just to go right back. So keep an eye on these liquidity levels. And if you're gonna player, have the 122 or 122.5, 120 puts up. The 125s, 130s, and 127.5. So I can't remember if it moves by points or 2.5s on JPM because I don't trade it. Anyway, of course, every day I've been shitting on JPM and then it has a nice day like this. But it's always just a technical break, right? Anyway, let's move on. Microsoft. Microsoft had a pretty decent day yesterday, leading to the upside. Gap down with the market, but kind of holding a nice little trend line moving up. And not too far from kind of just refilling that gap. So let's see if Microsoft wants to try to lead tech and to the cover pop. But we do have some squeezes in place where I expect Microsoft to take a break and chop around this daily 8, which will be right around 260. We've got that 4-hour squeeze in place, up above at that 263 or so, and if we start to reject and roll over and take out that 256, we've got that 4-hour squeeze back down at the lows. But kind of expect it to just chop around today. I'm going to accelerate through these because it's almost 9. Netflix, stuck in a range. Not going to touch it. Nvidia, same thing. All the squeezes setting in. and chips not wanting to lead, and basically sideways. Not touching it. Qs. Oh, I love these wicks. Let's find our feet and get going. Qs filled their gap yesterday. At least they make it look like it was a continuous move, so no gap to fill to the upside. You know, when we fill a gap like this, it's done. I hit duplicate. Jeez Louise. You get rid of it. Not important anymore. So, let us see if we can find our feet and hold this base at 287, 286, where these squeeze bottoms are, pre-market low, and use that as support for the cover pop to try to get back to this wick. These crazy wicks can act like a magnet of where we want to get to. And then ultimately, that can be the range that we hang out in. These big squeezes moving into FOMC. Roku. Tight range, tight range, tight range. Starting to slip. Not a real interest here. Even if we keep slipping down to this probably daily squeeze. Bottom, at this point, it's about a 5 or 6 point move. I'm just kind of not interested in Roku as a whole right now. But could be a good short since it looks weak today. You know, let the market try to do a cover pop. Maybe back to this 87, 89. And short it down to 80. But not a big interest for me. Shop. Shop. Probably just going to stick in this range as all the squeezes set in. And Shop's probably going to squeeze while it waits to see what they're going to do with Amazon leading into its split. So no, not a big interest. SPX going to be gapping down about 30 some odd points. So I'm going to be opening you know, somewhere between 39.40, 39.30. So we got a couple of zones of support. Let's see if that can at least hold it up enough for it to go and fill the gap on SPX. You know, more often than not, filling the gap is the easiest play on SPX. And when we pretty much fill that gap, you can turn around. So we'll be gapping down. Let's see if we get a cover pop to fill the gap and then head lower. SPY. Had the gap. Filled it yesterday. Kind of bouncing at it. Wouldn't be much work for SPY to get up and fill the gap and test these squeeze tops just to roll back over most likely and settle in this chop range. So probably going to be stuck between this 388, this 398. So as we get near the bottom, I'd be playing long. As we get near the top, I'd be playing short. Keep an eye on that key at 395.8. Pretty much getting there. Could be considered maybe filling the gap. Yeah, you know, obviously we closed a little higher, but you know, and if you don't take entry in these squeeze tops for a short, when it breaks below this is a great spot to, yeah. Anyway. Square. Ooh, edging tighter and tighter. Stuck between two key levels. The squeezes are going to start setting in. I pretty much expect it to stay between the 78 and 85. So, you know, when we get near that, you can go long. When we get near that, you can go short. Tesla. Slowly slipping. Squeezes setting in. Probably going to contain price action today. VIX. You know, little gap up, but look, we're centered around this 29 zone again. Yesterday we opened at it, a little pop up, a little swing below, closing back at it. This 2880, 2920, a zone centered around 29. Probably just going to be chopping around that and these squeezes today. So up to 30, down to 28. Yep, that's probably where we'll be. If we start to break out one way or the other, then we're probably breaking down on the market if VIX is going up, or up on the market if VIX gives out 28 and starts getting to 27. But overall, that's it. Hopefully this was helpful for everybody. Thanks for tuning in, and we'll see you in chat.